What's up, everyone? Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
And I'm Will.
And today it's just the two of us. Last week I said it was just me and Brian, the two of us. Now you're back and Brian's gone. Well, hope you all had a wonderful and safe 4th of July. We have all of our digits. We hope you do too. And no one lost any fingers or toes in fireworks. So hope you all had fun. I did.
Yeah, you sure did. I'm a little
more sun than normal.
Looked like I picked. Yeah.
So we're going to talk about 3 topics today. So the arrangement was let's figure out what are some of the things that are being most talked about in the last week or so, and then let's just give our own opinion, our frontline experience of what's happening related to that here in San Diego, California, on the front lines of mortgage itself, even if you're not in California or San Diego. So,
I mean, the biggest thing, bro, has been, Andy. Interest rates finally dropped down to 6.77%.
Yep.
That is the lowest in nearly 2 months. And should people jump in now or wait?
So last week, Brian and I talked about this, should you get approved now, wait for rates to drop, or should you just wait until rates drop to get approved? And a lot of this really for us just came down to whether or not you're trying to move in a specific window of time, like 3 or 4 months or 6 months or later, or you can afford to wait. That's part of it. The other part of it is the afford part. Like I just mentioned, the afford to wait. Well, can you afford to afford it? Like, can you even afford at the rate where they're at now? And if you can't, or let's say you can't afford the price you want, we'll see what you can get approved for at this interest rate environment. And then as that rate goes down, then that purchase price can come up.
No, absolutely. I mean, the great conversation with Jerome Powell is that he finally showed some signs that indications that interest rates are going to drop. Not interest rates, I'm sorry, that he's going to reduce the Fed funds rate. So that actually just got a lot of investors. And that's the reason why we started seeing the interest or the mortgage bond securities going down, the 10-year treasury, which is, one of the indicators we understand that will allow interest rates to start going down. So that was good news. And a lot of investors, even though the rates haven't dropped, but when they see the Jerome Powell just talk about these things, it's like, all right, we're going in a positive direction. So I think it's time to, taper back and let's reduce these interest rates. And that's what we see, on average, that 6.77%.
And it's a little bit of a song and a dance, right? Because it's they can't just tell you right now, hey, here's what we're going to do in 3 months. Here's what we do in 6 months. Yeah. But at the same time, they can kind of leak some language that says, here's where we might be going. If we see this, we see that. Or when this happens, we'll consider this. And so there's some read between the lines stuff happening. Yeah. That's kind of why I said song and dance, because they're not going to really tell us. But here's what that tells me on my side of the deal when I hear you guys talking to people. It's sentiment. Yeah. It has to do with whether people feel positive about the direction of interest rates or they feel negative about it. Are they optimistic or pessimistic? And what it seems like compared to this time last year is I remember us talking about how everything was a quarter click to the right quarter-wise. It's like, wait, hold on. Winter became spring. Spring became summer. Summer didn't really happen, right? The summer buying season. And so I remember at this time last year, the sentiment was a lot different. This year, the sentiment has some cool marks to it, but it has more to do about the economy at large rather than just interest rates being the big elephant in the room. Yeah. With them coming down, not only the last couple of weeks, but also comparatively from 2024, I think this is what people who've been on the fence, I think this is what they've been waiting for.
No, most certainly. But at the same time, I feel like the majority of people are just consider the fact that this is a new norm. And they're always asking, is the Fed going to start reducing the Fed funds rate? That way, the Treasury starts reflecting the interest rate with that when that happens. But I just think a lot of, consumer confidence just isn't there. The good thing is now we're seeing that that Jerome Powell just made, again, an indication that they're looking at maybe reducing the Fed funds rate. Now, my question to you is going to be, do you think the Fed's going to pull the trigger on this sometime next month? Or
So I think they might. The question that I was actually posing last week or kind of hypothesizing is, well, will it be 25 basis points or 50? Will it be 0.25% or 0.5%? And if something goes sideways and it has to be more than that, then that really is an indication of a couple things. Either their analysis has been totally wrong, or their strategy was wrong, or some really bad data happened that's letting them kind of come up with this decision as a response to that. I've been saying this for a long time. The Fed does not determine what things happen to a degree. I try to sit on the side of the fence of the Fed reacts to things, and then they kind of it's like when you turn the shower on too hot and you react to it. You go, oh, okay, I got to dial that back just a little bit. I feel like that's how they play it. So I think they will do a rate reduction. I think it's going to at least be a quarter. I think depending on how soft and how weak the data is, it could be a 0.5%.
Yeah. I mean, if it is, I just had to hear just a 0.25% difference. And on the 0.25% difference, if we're looking to purchase a $500,000 home with a 0.25% rate drop, that could lower your payment from about $150 to $230 a month.
Yeah. Every month.
So we gotta take those things in consideration. For some people, let's just think about that. That could be a car payment.
Well, yes, and think about that over the course of time. That's tens of thousands of dollars. It's
Absolutely.
not like we can say to each other, "Hey, I saved $100 a month."
Yeah.
Okay, well, how long is that after 5 years?
Yeah,
it's way different than just like, oh, okay, it's $100. It's not.
Well, even just let's just say, when rates drop again, probably most people are going to refinance. So let's just consider the fact this could be about a year's time or what have you. I mean, 200. That right there can help for daycare. That could help for groceries. That's somebody's car payment. There's a lot of, that's a lot of money where people could actually put it in a different place to help them, or even just go one of those weekends that, we weren't thinking of going out anywhere, but now I have $200 some. I can go out there and do something with it. I know it sounds minimal, but it can be a lot in other places.
Yeah, but you could tuck it away.
Exactly.
You could invest it somehow. You could pay off other debts you might have.
Absolutely.
You could be benevolent and do some giving in some form or fashion to local nonprofit or some agency in town that's doing something good you love. Like, there's a lot that can happen is the takeaway. And yeah, even a 0.25% makes a big difference for people in the long run. You know, how many times do you send out financial financial, like the cost estimate to a client, and the 0.25% difference over the course of the loan is tens of thousands of dollars difference. Like, hey, here's why you should buy it down, or here's why it's worth doing this versus that. Because on paper, you look at the math of it and you're like, it might only be $100 now, but it's like $30,000 over the first 10, 15, 20 years of the life of the loan.
Absolutely. The other biggest thing, and I know that you and Brian were talking about, was, being prepared and all that. There is a buyer psychology to this, to the readiness and the timing of things, and a lot of people, what we're seeing is, I want to be prepared, so we do get them approved. And I think, prepared buyers are the best buyers. For sure. A lot of people are just saying, well, I'm waiting. And then, for instance, right now we currently have a transaction where the property went into probate, and it's here in Chula Vista, and they're selling it for $450,000, a 3-bedroom, 1-bath. And this is going to be near the Gaylord, where the lot square footage is a little over 7,500 square feet. It has a potential building ADU, what have you. So anyhow, they were referred to me, and this buyer is just like, I have this opportunity to buy this house for $450,000, right? It's going through probate. And I said, well, great. Connect me with the seller. Well, the seller, it just went through the trust. The seller happens to be the actual, the niece of the uncle who passed. So I said, hey, Wendy, great. I was introduced to you by Danny, and he mentioned that he's looking, to purchase his home, and you're going to give him a deal. The house is selling right now. Well, Zillow has it between $660,000 and $700,000. Right. And he's buying it for that little.
$450,000?
Exactly.
That's crazy.
Exactly. And she's willing, hey, we only owe $444,000 for the reverse mortgage, I'm sorry. And then we have to pay the realtor fee. So we may have to increase it to $500,000. And I said, well, after doing the numbers, you're more like at $460 something. Why don't we offer $500,000 and give him $20,000 towards closing costs? She's like, not a problem. And I said, well, how is it that you know Danny? Oh, we go to church together, and I love him and the wife, and I just want to give him a deal. Because it's a probate, we still have to put it on the market, but I'm willing to go with them.
Wow.
Well, fast forward, ran their credit today. Guess what? They're not ready.
Oh, no.
Not ready.
No, are you
not
for
ready.
real?
Credit is not up to par. I'm not able to help them. Income's there. Savings isn't. And credit isn't.
Oh, man.
And this is part of that readiness, part of that, hey, I want to time it at a certain time, but it's too late now. This house will be foreclosed on in less than 2 months if they don't find a buyer now.
Oh, man, that's heartbreaking.
It's very heartbreaking because we're seeing this, the buyer psychology, of everything that's going on. You got to be ready. And again, the buyers that are most prepared are the ones that are going to win.
You know, and the other part, I was writing this down as you were saying, because I've made this point before. I want to make sure I say it super clearly now, is that if you're a buyer and you are entering the market, you're going to be going up against someone who is ready. And so even if you feel like you're prepared and you might have all your I's dotted and your T's crossed, the other people bidding on a place or looking at the unit like you are, they might be more ready than you. Yeah. And I don't say that as a scare tactic or fear mongering. So get that off the table right away. I'm literally just saying that because if you are devoted to the process of being prepared, that you have everything checked off the list and you're 100% ready, then the market's going to be ready for you too. And then you'll be the person that everyone else has to contend with, because you're going to be the most prepared when it comes to submitting offers and looking good on paper for a seller to take your deal. Yeah.
I mean, it comes to the question I was going to ask you, Andy. Do you think too many buyers are waiting for the perfect rate and missing out on opportunities?
I don't know. I don't think so. And the reason is because you look at how many people are first-time home buyers last year in 2024 and this year so far, it's still in the 30%, it's like the mid 30%, which is historically consistent over time, even in different markets where prices were not where they are at now, interest rates were better than they are now, and the conditions were not the same. And so I think what has changed that we've talked about is behavior. I think the way people look at housing has completely changed. Yeah. When we're sitting here talking about, oh, I'll go buy that 50-year-old house that needs to work itself, but it has the yard that I want to put another unit on, or I want to do a garage conversion into a loft or whatever. That mentality is happening way more rampant now than it was even just 5 years ago, 10 years ago. Yeah. And that I think is changing. So that kind of being the motor is why I think there's still people buying houses now, and the hesitators that are going to continue hesitating. Now that's who you're up against.
Yeah, no, exactly. And you know, I do want to bring up in 2023 towards the end, we were seeing the rates in the mid sevens, even close to the 8s. And we actually had a lot of people purchasing that range. And then what happened in August, September of 2024, when we saw that dip, we started seeing, you know, conforming loan amounts, under like 5.25%. And then we saw the high balances at 5.6, 5.75. So we were able to drop people's rates from that high 7s down to that. That saved them substantially, $600-$700, you know, monthly on some people, because again, we're in California, we're in San Diego. Home prices are a little higher. Sorry, I was being too modest there. They're just way too high. Okay, it's what it is. They're just way too high. Yeah. So on a $1.2, $1.5 million property, in which we're helping a lot of our service members get into, that's about a $700-$800 monthly payment that they save, you know? And so we're going to see that again. Even though we've been seeing the mid 6s, mid 7s, I think we're going to get there with this information now that we're getting from from Jerome Powell. You know, I think we'll be seeing, at least, I'm saying, for our government interest rates, I think we'll be seeing, you know, the low 5s, mid 5s soon.
Yeah. And I'm going to say this next part, there's a nerd section, but hang with me here real quick. In the last 20 years, we've had two black swan-like events. 2008 and 9 was one of them, and 2020 was the other. Outside of those two things, the market is going to react, and rates will go up and down based on what the market conditions are, what the market data says, what jobs say, what global economics are doing, what the cost of oil, like all of these other factors without these black swan type events are really what are the barometer for the market. Yeah. And I think we're going to find this sweet spot historically that's between this like 5 and 6.5, where aside from those big events, I think that's where the market is going to be best suited long-term.
Yeah. So again, the best thing I can suggest with that information that you're giving is, you know, check your credit. If you haven't checked and you don't have the Experian app, download that thing. It's free. Go in there and check your credit, see where you're at. Review your equity if you're going to look into refinance, right? Or you're looking to purchase. It still works the same way. You're not going to review the equity, but you'll review your credit, review your equity, and, you know, start working with your loan officer. You know, just start kind of gauging where you want to be if you're going to refinance, or if you want to put some money to work into an ADU or whatever it is that you want to do. But start preparing now.
That's solid. That's solid advice. And I guess I would say that in my own terms to be like, hey, window shop your own scenario.
Like, like that.
Like war game it. Like go figure out what would it take for me to do this? What would I have to do to make that? What would I have to earn to have this? And if you're trying to buy, and what would I have to do in my yard if I was going to build this, whatever. Like play that game a little bit. Get a piece of paper out, do some measurements, play some numbers, and figure out if there's something there for you or not.
Yeah.
And at least you've done the work to come to a conclusion rather than just hypothesize without any effort and come to a decision that might actually may not be helping you.
And Andy, I'm seeing a lot of my clients, they're going to Google, and I get Google is very helpful, but I'm telling you what Google doesn't have is that true life experience of an actual loan officer, seeing the true financials and be able to point you in the right direction. We are in the trenches. So find your loan officer, whoever you trust, and then just get to know them. See if they really are in the trenches. They can really give you the best advice possible to set you up and your family.
Yeah, good point. I want to go to the next topic if we can, please. This is the rise of Nepo buyers. And so basically this has to do with like financial gifting in real estate, and nepotism is what it is. So, we're family because of marriage. And if I'm like, hey, Uncle Nemo, I need to borrow $200,000 to go buy a house, that would be an example of the family lending a gift, or not lending it, giving a gift to someone in the house, in the family line in order to go buy a real estate or whatever. And this is on a very steep increase. It says here 38% of home buyers under 30 years old received family help for their down payment. I'm not surprised by that crazy. At all. Are you?
Andy, what if I told you that the biggest advantage in today's housing market, it's not your credit.
It's borrowing money from your mom and dad?
It's your parents. How crazy is that?
Now, there's a couple angles of this, right? Because the I'm just going to say the boomer generation to kind of identify the collective we're talking about. There are some that are outside of the boomer generation that are doing this, but I'm going to say that because of my own age. That generation saved as a part of fiscal responsibility regularly. They were taught that by the generation ahead of them. And so there's these benefactors, I'll say, then 30s, late 20s, early 30s, even in the early 40s, that are the benefactor of this saving behavior and habit that's built in to the boomer mentality.
Yeah, that's awesome. I mean, the Nepo, right? Nepo buyers, not Nemo.
Not Nemo, right? Uncle Nemo.
But we're still there in the Medes, right? Like it's building its own right there. And again, it just becomes like, like just like Nemo, the dad just taking care of their son, putting him in the right place, putting him in the right housing environment. That's what us parents are looking to do, again, because of what you just stated. These generations are changing now. We're changing. We're evolving to just pay more attention to what's going on in our environment and learning to adapt. Like for instance, we're currently adapting by looking at certain opportunities differently. We're adapting by actually with the new rules and regulations in California, how they're giving you the ADU rules. What are we looking to do? We're adapting to, hey, we see this land that our kids were probably throwing the football. They're older now. How do we build on that?
Yeah.
And then that's evolving. That's really helping. And so we're creating that wealth. And then we have this wealth, we can extract some of that equity because we gave it that forced equity into it. And so why don't we help our children just kind of go out there and do this now?
Yeah. And for those of you who are like, maybe it's not as obvious to you, what we're really revealing here is that we sit around here at the office and we talk about this as family members ourselves. We have the generation above us, we have our generation, we have our kids, and then in your case, a couple of your kids who have their own kids, grandpa. And so we sit around and talk about how do we gather real estate into a family portfolio that then becomes part of what the subsequent generations will be the benefactors of themselves, just like we're the benefactors of those ahead of us. So whether it's financial assets, it's real estate assets, or a combination of those things, this conversation is on to our mouth all the time. And it's clearly happening with a lot of other people too. You have parents who are willing to gift their adult children the down payment money, the cost for closing cost credits, whatever. If it's repairs or updating the house, they're like having the same agreement we're having, which is if they can't do it on their own, I'm going to help them do it so they can be in. Yeah.
No, it's crazy. More and more first-time home buyers are not scraping money for their savings account. What they're actually doing is they're leaning more towards the bank account of their mom and dad, which is pretty nuts. Currently, and again, I like to use real life scenarios because we're going through them. I do have a client that's looking to purchase, they're purchasing a home in Bonita. They currently own a home in Bonita, okay, by Bonita High School. And it's a 2-story. And so what they're looking at is like, hey, Will, you refinanced us when we did. Our rate's 2.25%. We don't want to get rid of this. We owe $450 and the value's like 1.1, but we want to go to like a 1-story. Oh, and then the new house has a pool. We want to just kind of for exercise and for our family to grow. We are going to be grandparents too. We want an environment where our grandchildren and we can, just host family. And so they're buying this property down. And the first thing I said, Renat, what are your intentions? She goes, oh, my son's just getting out of boot camp. He's going to get PCS orders to San Diego. And so what I like to do is put him in his house.
Wow.
That avoids the whole down payment. Yeah. It avoids all of that stuff. And, what's cool about that is her payment's like $2,600. He's an officer getting out. He's probably going to get like $3,900. She's probably going to charge him the full amount. And, it's still a really good price for that rental.
Yeah, his BAH is going to adequately cover her cost of the mortgage plus some.
And
it's not going to dent his income, but and then he'll be in the lineage of inheriting that down the line.
So we're seeing...
What a great scenario.
So we're seeing these things, Andy, partake in different ways. It's not just going to be monetary. Here's the money. It could be... hey, departing residents, I'm going to leave for my kids.
Now, so one of the things I think where we kind of find ourselves in the position of time is this, where there's a lot more millennials doing this than Gen Z, partly because the millennials are older, but also the millennials are more in their peak earning years and the Gen Z are coming into their peak earning years and still have more of those years ahead of them. So right now it's estimated that 16% of Gen Z are homeowners versus 31% of millennials. But I actually think what's going to happen is Gen Z is going to probably surpass millennials. I think some of the millennial behavior is still stuck in that 2008, 2009 bottom falling out of the market. And oh my gosh, when I was a kid, my parents lost their house. I don't want to own a house. Yeah. I know that psychology is running around because I hear it. In Gen Z, though, they're like, hey, I was born and I had a phone in my hand already and social media, had my own profile when I was 1 month old. And how many people in that space are talking about house hacking, buying multiple properties, finding passive income businesses, getting creative with cash flow, and the entire approach about what owning real estate looks like has changed. We've been doing this for 20 years now. Yeah. And it's definitely markedly different than 2005 when we had our first office and literally is all about buy house, buy house, buy house, right? It's completely changed. So I am estimating that the Gen Zs are probably going to surpass the millennials by the time we get to like this relative point in history where they're the age that the millennials are now. I think we'll see that Gen Z would have surpassed them possibly.
I agree. I mean, there's more information going out there, and again, why is this trending? Why is this trending so much? Because we're still seeing home prices high. We're still seeing interest rates. They're still high, and so, we're starting to see more families wanting to just combine efforts together. So that's why this trend is going out there, which is pretty crazy. I never thought of Nepo buyers, but there it is.
Well, I think some people, they have to do it by force. And I think others are doing it by choice. Yeah. And both are good. I don't think that they're necessarily bad, except for when you're doing that and your financial behavior is a little bit of loosey-goosey. Yeah. If you don't know how to keep your budget underneath what you spend every month, maybe buying a house isn't the right choice for you. Maybe your parents giving you gift money is not the right thing for you. There's some of that kind of stuff, but that's very highly personal. Yeah. As a theory and as a practice, I think doing this by choice is definitely a good way to go to get into real estate if you're in the millennial or the Gen Z demographic.
And I mean, the cool thing about those with family support, they can skip the grind and go straight to the offer table, right? With a bigger down payment, which is and they can remove, they can have lower contingencies. It's kind of like when you're playing Monopoly, Andy. It just says right there, skip. Go to jail and get straight to go.
Do not pass go. Go straight to jail. Do not collect
that one. No.
Do not collect $200.
These guys are doing the reverse, right?
Yeah.
just cancel jail and go straight to go
jail.
and let me give you that money again.
Go straight
just
to Park
because that's
Place.
how you do it. Just go to Park Place.
Boardwalk.
That's what that feels like,
Oh my gosh.
But, there's also the other people who just don't have that type of support.
Yeah.
And the cool thing about that is there's down payment assistance programs that are being offered out there. There's house hacking where you can buy that property, go in it with somebody else. You could go in there and partner with the co-signer. So there's multiple ways how you can go about purchasing a property and hacking that.
One of the first loans I did in 2006, actually, no, was it 2005? No, it might have been 2005. I think one of the very first loans I did was a friend of mine lived up in the Orange County area and a former coworker of mine. And she and one of her college friends bought a house and lived at it together. They were not married. They weren't even together. They weren't like boyfriend, girlfriend situation, but like, hey, we're two single people. We know we want to buy in this area. We both want to live here. Instead of I have an apartment, you have an apartment, we're friends, let's just get a house. They actually co-signed and bought a house together back then. They both had some down payment money, and we're talking 20 years ago. So even though it was in Orange County and it was more expensive than the rest of the country, it was still way less than it is now. And that was their house hack, and we're talking 20 years ago. So that pursuit of solving it, I think, goes back to the whole behavioral thing. The way that the younger generation is looking at owning homes and owning real estate has completely changed. They absolutely look at it as more than just a home. It has to create some sort of cash flow later. It has to create value and an asset for themselves. And for families that are not having this conversation, I would implore you to please start talking about money with your kids. Start talking about real estate with your kids. If they're of the age where they understand the concept of money in, money out, credit, debt, assets, start having those conversations. Talk about life insurance, talk about real estate, talk about investing, talk about saving, and include them, answer all their questions. And if there's something you don't know, go learn it together.
Yeah, no, absolutely. I mean, whether you're backed by parents or doing it alone, knowledge is your power play. Got to take advantage of that. And that's why we get onto these things, to share that information. Go out there and empower you so you can go out there and get it done, or just to plant a seed. And how do I go about this? It just kind of gives you a different direction of thought of how I can make this possible if I'm really looking to be a homeowner.
Yeah. Yeah.
And so
that's a good one.
This is, Nepo buyers are changing the way we're doing things. They're changing the way new generations are purchasing homes. Mm-hmm. And I love it.
And, and I'll tell you, this is going to be, again, a little nerdy. Hey, you don't like the way house prices look right now? Guess what? People who are doing what we're talking about are helping secure that home price where it's at. If they're buying it for market value as listed right now, or maybe even just a little bit below, that's like locking in yet another comparable that's going to be put up against the house you're looking for when you come to buy. So this is happening. You need to understand this is occurring in the market that you're also looking at are the people that have cash, have money in the family, and they're helping the next generation buy a house. Yeah. So just know who you are in the ring with.
Yep, exactly. And here we go to our next topic, right? Okay. Zillow. Come on, Andy. Here we go. Zillow just changed how listings hit your screen. And not many people are happy about this, Andy.
Well, is it the right people or the wrong people? I think that's up for grabs, huh?
It's going to be a pros and cons, right?
It's going to be a little of both.
Because there's a lot of times where these listing agents don't want to put that house on the market, or the seller doesn't quite have their house on the market ready, right? So they want to kind of have it like a pocket listing or an exclusive listing. So there's going to be pros and cons. And a lot of professional real estate professionals, they're just kind of seeming like Zillow's just trying to take control. Is that fair to us?
There are a number of angles on this topic. So let's first talk about since you mentioned the term pocket listing, let's talk about what that is first, right? Yeah. So this is a listing that an agent or an agency will have that they want to offer to someone else in their agency or intra-agency with another agency without having to market it to the public at large. Yeah. There was a way to put the property on the market on Zillow without putting it on MLS, which then means that it's not on MLS to hit the searches for all the other buyers that are also looking for the same set of filtered data to come up on their search. So unless you're searching in Zillow, you wouldn't know about it, okay? So this is an attempt to try to reduce some of that. I understand why Zillow would want to do this as a competitive edge. I understand why people liked it, and I also understand why they dislike it. because some of that pours into the whole MLS argument altogether. Hey, if I'm paying fees to my realtor association, why are you just giving all that data in the back end to this public page that's marketing it over here? On one hand, it might bring me a buyer, might get me some more exposure, but you're literally giving them all my hard work into MLS out here to the public that is now cross-competing with us for other aspects of the business.
Exactly.
So this thing has a lot of, this thing's kind of like you know how like oak trees, they're tall and they're really strong, but underneath the ground, there's all these other oak trees that are holding on to each other, like the giant sequoias. This is why they can be so tall, is their interconnected root system underneath the surface. Okay. This is what this is like. You got MLS, you got Zillow, you got Redfin, you got all these other places, and underneath it, like their tentacles, their root system is all like branched together, like hugging tight, and above ground, they're marketing to you in all these different platforms.
And I get it. I understand, the pros and cons of it too, but we also got to consider the fact that we have a lot of people who are selling their home and they just don't want to put it out there. They just don't want to put it out there. They just don't want the neighbors to really know. They call that kind of a pocket listing / a ghost listing. And that's something Zillow is trying to refrain from. They're just saying, well, then if your home doesn't sell because you had an exclusive, you're not going to put it back on our site. We just don't want it.
Well, the thing about it is those sites exist because of the data that's in MLS to begin with. And then this was kind of like the sidecar, right? So if there's like a motorcycle, there's a sidecar. This is the sidecar where you can still put that data onto Zillow or Redfin to be looked at, or just say Zillow. Let me scratch the Redfin part. You can put that information on Zillow to also market your property without having to go to MLS. So you're bypassing MLS. Now, I understand where there might seem to be an advantage, but I also can understand that people are saying, hey, you're just being sneaky. Like, don't be, don't be sly about it. You either have a place that you're marketing, you're selling, or you don't. Now, here's where there is something, I guess, and I don't know how I feel about this, honestly. What about the for sale by owner? Like, we understand real estate, right? Yeah. If you wanted to sell your house, could you list your house? Yes, you could. Could you hire a transaction coordinator to just do the transaction coordination of your house, and then you can only do half a commission by just paying the buyer, not paying the selling listing agent? Could you do that? Yes, you could. Of course. Now, are you going to put it on MLS? Yeah, maybe. You put it straight on Zillow? Yeah, maybe. Do you want to offer as a pocket listing, private listing? Yeah, maybe. You're kind of cutting out people's choices at that point. So on the other side of the argument, I understand where there may be situations or conditions where this was suitable. But I think in general, the policy will hopefully be more friendly to people trying to sell than a cramping down on the people that are looking to sell. Well,
here's the thing. Compass is already starting a lawsuit. We're always going to just try to find the way of why this is not fair. And, I'm glad somebody's looking at it. Like, let's not let one entity control everything of how we do things. I mean, we've been doing real estate for hundreds of years already. And now this big, giant monster just comes and starts changing the way we're doing things. Remember, the realtors empowered this big company and made it what it is now.
Yeah.
And now they're feeling we're losing control. Well, you should have thought that in the beginning.
You're giving them all the data. Like for anyone who's catching us in this part of the show and you don't know that all the information exists on Zillow because it exists on MLS first, that's how it exists. Yeah. So anything on MLS is going to show up there. Now, again, I can sit and listen to everyone's arguments about the benefits about that and the negative aspects of that. That's fine. Everyone's going to have a different opinion. And frankly, everyone's had a different experience on the mortgage and real estate side and on the consumer side. Some people hate Zillow. Yeah. Some people love Zillow. I just think that there's a reorienting of who's going to do what and how, because if both are going to continue to exist and let's say have enough fair play to maintain relevance, then some of this stuff's going to have to get massaged out. Just like a couple weeks ago, we talked about the new ADU rules that are coming to San Diego. Well, you give them an inch, they'll take a mile. So in San Diego, we gave everyone an inch, and some people took a mile, and they go, wait a minute, that's too far. Wait, come back, come all the way back, come back. We gotta have some limitations to this thing. And I think this is kind of that same formula a little bit. They had to readdress the limitations and figure out how to maybe curb some of these like back channel deals that were happening.
I don't know. I just think Zillow just wants to have its cake and eat it, is what it is. They're trying to change these things.
We know that they do.
I'm just, is this a bigger trend toward transparency or control?
That's a great question. What do you what would your argument be
Might
for?
be just going to be control. They want to control. They want, for me, my take and everything that I've seen in the years, because remember, I've been in this industry 20 years. I used to see them, they were more of a data. They figured out a way, how do we enter the real estate market? And they entered it. And then they tried it where they were entering, buying, and trying to do the whole fix and flip, and they lost their asses off, where they had to get out. And then we saw Open Door kind of go in there now like, hey, we were pretty kind of successful at this. Why don't we just combine efforts? For me, they're just trying to get realtors out of the space. You know, that's how I feel. For me, it's more control. It's your home. You should be able to put it, advertise it however way you wish.
So I have a question, and I didn't bring this up. I didn't write this down, or it wasn't in my like article notes. But do you think that this is an attempt to try to do things above board and force realtors to put all their information on MLS first to raise the standard for which they're seen and which lens? Because I can also see that there's, again, this isn't stated anywhere. I can also see as a software company, they would want to have the competitive edge over Redfin and everyone else, right? So if I wanted to do that, I would want to be first with the new thing or the next thing to have a competitive edge. And if that means that new thing is more, let's say, in line with what would be more favorable, being a good neighbor in the space, then maybe I'd do something like this. I don't know.
But I don't see that.
I'm really stretching.
Yeah,
you can tell I'm really stretching to give them the benefit of the doubt, aren't I?
I know you are. And here, you know what? I even wrote down the pros and cons. Here are the pros. Increasing transparency for buyers.
Okay.
I think that's good. They get to see a little more, like the house is going to be on the market. Cool. It's more visible.
Okay.
You know, then I have levels of levels, the playing field between agents.
Okay.
It's like, okay, I remember that company saying that they always have these exclusive, you know, and what is that really? Is it really exclusive? Because when you see that or you hear that, it makes you feel like you're getting a deal. And really what you're getting is a house that is just not hit the market yet.
Maybe you got the inside track.
There you go. You know what I mean? Reduces confusion and misinformation from buyers searching online. A lot of times, why didn't I see that property? I'm driving around, but I see that property, but why isn't the property, right? So for that, there's the pros. It just really has that transparency, which is pretty cool.
Yeah.
Here are the cons. It limits agents' flexibility in pre-marketing strategies. A lot of people, they're preparing their property before they put it on the market. Maybe it needs a certain things where people have all this clutter, but they want to start the move now, you know, and start putting it into their Compass and send it to all the realtors there, or LPT Realty, right? Put it right there to all their co-workers, where I'm going to put it to you guys first, but I'm going to have this listing coming up, but I'm doing decluttering it, repainting because it needs some work, right? So that's kind of some of the cons there. Sellers lose some control over on how their home should be presented at first. And we're talking about that whole decluttering and all that stuff. You know, could it lead to fewer exclusive deals being shared early on with trusted, buyers? It can. And so I just think those are some of the cons for some of the sellers. You know, it's going to give that approach where I have to hurry up now and put in, and sometimes it's just too much, you know? And these people utilize this because they need to start looking for somebody to buy that home because they already have plans, or they already have job transfers, or they're already they already have an accepted offer on another home elsewhere.
Yeah, they're in a contingent situation.
There you go.
Yeah.
You know, and so it's just kind of, how do we get around that? So that's all I see with this. And we got to acknowledge that this started already on June 30th.
Yeah.
This is a thing now.
Yeah. And always with a new, when they deploy a new policy or a new rule and whatever it is, MLS, it's in your county or your state. There's always kind of this cold period where it was like, well, what do we do? How do we figure this out? Or how do we work with it? Or how do we work around it? And then it eventually reveals itself and people figure out a creative way to make it happen or make it work, even though maybe the pressure doesn't seem at first like it's going to actually help you. Yeah. I'm telling you, man, the best salespeople, they're going to figure out a way. They're going to figure out a way, and they're going to use this as an advantage somehow. I guarantee you, someone's going to find an advantage, and they're going to be first out the gate with it, and they're going to set the course for everyone else following.
You know, and I'm glad that you put it that way, because this information serves a seller in a better way. The people who you're going to work with matter. You can now, with understanding these things, going and hire that realtor that really is going to have that, is in the trenches and understands how to maneuver, understands how they're going to be able to get you to that, to achieve that top sales price of what you're looking to obtain when you sell this home, and who's going to sell it in a timely manner. So now you have the proper questions to ask. What's going to be your approach with this new change with Zillow? What would be your new approach? How would you advertise? What's your workaround, et cetera? If needed.
And typically, when I look when I'm listening to you and I'm thinking about this, like typically when there's like big changes in the industry, whether it's compliance or it's licensing or it's even something like this either pulls people up or pushes them out. And yeah, you can. I'm not saying you're going to like leave the industry, but you are going to have to get called upward into whatever's going to be required and expected of you in this new set of rules.
Yeah.
So. Again, I don't want to dramatize what it is and what it means, but like someone's going to figure out how to rise above it and work with it. And other people are like, you know what? I just can't. Yeah. I just can't deal with any of this anymore, and I'm done.
Well, listen, Andy, I said on the previous article, knowledge is a new power play. It's what it is. How you put that to work is all entirely up to you.
Yeah. Yeah. Well, I certainly enjoyed our conversation today. These three topics, although they're, let's say, like trending for, the population, for us, every single week, it can bring a brand new, completely different list of things that we got to talk about. And the only reason I'm bringing that up really is just the versatility that's required of us in the market right now is also the same versatility I would say that you should prepare yourself for in your own situation. So just as much as every week we could say, oh, remember 3 weeks ago we talked about that, or that thing came up again. Yeah, there's some things that are constant, or they ebb and flow and they change. And then sometimes you just get a wild one out of right field. And you're like, whoa, okay, that thing's happening, or that's coming. Now we got to figure out all that too. So stay nimble, stay swift on your feet, and stay prepared.
Absolutely. I think these articles, this is what's trending. This is what people want to hear. I know we probably spoke with something similar about last week, you and Brian, but it all comes together. Every conversation is going to be unique and different. What we talked about, Nepo buyers, doesn't mean anything. Maybe not. But you know what? There's so many buyers in the sidelines right now that didn't even think how to approach that conversation with a family member or somebody to co-sign with them, or thought that there was even down payment assistance. We don't know that. You know what I mean? And so we're just hoping that these trending topics are indeed what they're looking for. And we're just going to converse on them.
Yeah. No, this is good. Thanks, man. I appreciate bringing your notes, bringing your perspective. And
my passion.
I was going to say, your attitude.
I got to bring it, man.
Yeah, no, I appreciate it. And, between you, me, and Brian, there are things we definitely see in alignment directly kind of all the time. And then I love hearing different perspective on things too. Yeah. The topics can change like they do, but we just sit in different seats in the company, in the organization, but also in the experiences we have with the people on the ground level too. So thank you for being prepared this week, and thank you for doing another show with me. Hopefully next week we'll have all three of us back. Hey, Brian, we need you back, Brian. So that's it for me for this week. So any last thoughts before we sign off?
Thank you. We had a great 4th of July. Just want to thank everybody, and I hope you all enjoyed it and were safe and had a great time spending it with family. And for me, now grandkids, crazy.
Back to the gym. All right. All right. Well, if this is your first time visiting the Mortgage Heroes, visiting us, go ahead and like the channel, like the video, subscribe to the channel, turn on the notification bell so that every time we drop a new video, you hear about it first. And check this out. We got a power couple on Friends of Mortgage Heroes coming out on Friday, July 11th. Check that out with Jen and Mike Edwards. You are not going to want to miss this one. Jen is a former pharmaceutical fraud investigator. That one had some wild stories. Learn about how she went from that into real estate with her husband, Mike, on this week's show. Thanks for joining us, and we'll see you again next week.
See ya.
So if you enjoyed this video and got value from it, subscribe right here. And if you want to watch another video, click right here.